Ladies and gentlemen, dear members, today I'm pleased to welcome you in Shanghai, Beijing, and online for a roundtable on the topic of our newly released Connexion magazine, The Development Prospect of French Companies in China. We also have a thought for our friends in South China and in Beijing that cannot attend the event in our office due to the situation. Tonight, I will be your host, together with Mrs. Julie Loluza, member of Executive Board of Mazar Group, Managing Partner of Mazar in China, and French Chamber Board member.
Thank you, Caroline. So, thanks a lot to be there. Taking the time to be with us for this very wonderful panel. Well, tonight we are very honored from Beijing to have Mr. Jean-Marc Fenet. Well, Mr. Jean-Marc is the French Minister Counselor, Chief of the Economic Service at the French Embassy. And also from Beijing, Mr. Michael Tran Van, Chief Operating Officer for Airbus China. And from Shanghai, we have the honor to have our president, Mr. Christophe Loras, the president of CCIFC and Chief Operating Officer of Accor China, Mr. Li Jingchen, Vice President Strategy and Development for Forvia Asia Pacific, and Mr. Emmanuel Gros, co-founder of BNA Investment Bankers and Vice President of CCIFC, and finally, Mr. Bruno Lopito, Managing Director of Civeco. Thank you. Thank you for all the panelists to be there. Tonight, we have a very comprehensive panelist and very diverse sectors. So you will hear tonight the vision of the French companies and their future development, as well as their analysis of the current situation.
We will take any of your questions at the end of the session. If you are online, feel free to write on the chat box of the webinar. Now we are very glad to give the floor to our president for an introduction speech and a presentation of the confidence survey we published this autumn. Christophe, the floor is yours.
Thank you, Caroline. Thank you, Julie. Thank you, everyone. Welcome. Very happy to welcome you tonight and to be with this esteemed panel. I am sure you will find the content tonight and the discussion very insightful on this subject of the prospect of the French companies in China for the years to come. Let me spoil it. Spoiler alert. French enterprises do have tremendous opportunities in China for the years to come. This is unquestionable. The question would be more on how and where to seize these opportunities. A lot of those questions are actually answered in the pages of this Connexion magazine that we have released. It's a very interesting magazine. Make sure you read it. And of course, a lot of these questions will be also answered tonight with our esteemed panel. So I wanted to start by this introduction by telling you the key takeaways that came out of the survey that we took 2 months ago at the French Chamber. So we took a survey of the French enterprises in China. And what came out, obviously, you won't be surprised, is that the zero COVID policy and the economic environment have a tremendous impact on French enterprises. This impact is on mainly 3 points. First, it's an impact on the costs and therefore on profit of the companies. That's almost 60% of the respondents that told us that their cost and therefore their profits were impacted. The second impact was on the investment strategies, with a large portion of the respondents telling us that the current situation had a negative impact on their investment strategies. Short-term investment, let me be very clear. We are not talking about long-term strategies, but on the short-term investment strategies, French enterprises tell us that they are negatively impacted. Some of them have decided to pause investments or to redeploy investment, and for a small portion of them also, some of them have cancelled their short-term investment strategies. The third impact of this current crisis on the French enterprises is on the reputation of the country. Obviously, the reputation of China has taken a negative impact, especially in the head offices and headquarters of French enterprises. And also, it has created a problem of recruitment, with many of the respondents telling us that they have more and more problems to attract foreign talents. Obviously, because the access to China is complicated, for one thing, but most of all because of this attractiveness of China, which is impacted by the current COVID policies. So this is, again, a snapshot of what's happening today. It doesn't presume of anything for the future. And again, resilience. This is a word that is overused these days, okay? Being resilient, we hear that every day. Nevertheless, I find that word pretty fitting to the mindset and the spirit of the French enterprises in China. This is something that, again, you will read through the pages of Connexion. This is something you will hear tonight, I'm pretty sure. And this is basically, in a nutshell, the introduction that I wanted to give you. And what I think we should do now is maybe to deep dive a little bit more in the current situation analysis and in the macroeconomic views by giving you the floor, Jean-Marc. I know you're in Beijing, and leaving you the floor so you can enlighten us and give us more insights on your current analysis of the current situation. So Jean-Marc, the floor is yours.
Thank you very much, Christophe. Everybody hears me? Well,
we do.
Okay, thank you very much. Well, thank you for that. I'm presently sorry for not being among us in Beijing. I'm stuck in my building since this morning, but it's a sign of the current situation too. Yeah. Well, I would probably tell the same thing just Christophe said, to make a difference between short term and medium and medium and long terms. I think perspective, I suppose, again, also middle and long-term perspective are still good. The current situation, of course, is complicated. I think if I had to choose a word, it would be complicated for this year, and especially all this year. It was not supposed to be a complicated year. As you remember, we could rewind the movie at the end of last year, you know, we were in a good situation. It was a recovery of the year 2021. And perspective of 2022 with a prospect of 5.5% of growth for this year. With this perspective, you remember that the GDP of China has to double between 2020 and 2035. So perspective were not so bad, on the contrary, and everything went wrong, I would say, and not the way it was expected. The surge of the Omicron wave at the beginning during the last spring, first in Shanghai and after since the second half of this year all over the country, was not expected, of course. The Russian aggression on Ukraine was not expected, and its effect on the world economy, of course, which affects also China, more indirectly probably, but affects it too. The climate situation of the last summer, I would say, with the drought, the floods, the heat wave everywhere, also in China, was not completely expected. But there was also this big event, you know, the 20th Congress of the party in October. And everybody thought in the first part of the year, well, everything was a bit suspended. We'll see after the Congress. After the Congress, well, we'll see that decision will be made. Maybe some relaxation will be taken, new teams, and so on and so forth. Well, to make it short, we saw that there has been a kind of disappointment after the outcome of the Congress. On the financial market, you remember that the stock exchange in Shanghai, in Hong Kong dropped The currency dropped also after the result of the Congress, because we saw it was, the line was still harsh. And I would say also that the relaxation of, in the first day after the Congress, the reaffirmation of the zero COVID policy was strengthened. And immediately after that, the authority took some measures. You remember, it was not a long time ago, the 20 measures of relaxation on cancellation of circuit breaker, on mandatory test, and so on and so forth. So it makes a situation which is complicated. If I had to describe the current situation, I would have to choose some words. Maybe the first words I could choose could be a certain, the general mood is not very good, it's being depressed, and there is also some confusion. Well, why some confusion? Because it was there is a time problem, I would say, because finally, eventually, the authority took some measures of relaxation of zero COVID policy, but exactly at the same time, of the biggest surge of COVID cases that China has ever known since 2020. You know, yesterday or the day before yesterday, there was something like 30,000 cases in China. The whole China is a number which had been never reached in the past 3 years. Almost 10,000 cases in Guangzhou, almost 1,000 cases in Beijing. And at the same time, so relaxation measures. So authorities, and especially local authorities, were a bit confused. And we have seen some examples in Hubei, for instance, or other provinces of authorities just a bit lost, taking relaxation measures, seeing a surge of cases, coming back on the previous measures of the day before, and so on and so forth. Well, so just a bit of confusion because of this time issue, of course, and a general economic situation, which, of course, is a result of this zero COVID policy, which is, I would say, the mother of all the battles, actually, and which the most important thing when you consider macroeconomics and business in general, actually, because according to the cases, according to the lockdown elsewhere, we still have something like 25 or 30% of the provinces creating the Chinese GDP in a certain way of lockdown here on a certain way, not exactly like in Shanghai during the last spring, but many places where situation and the life and business are very disturbed by all these measures. So we have now, if we could compare the Chinese economy as, I would say, a kind of plane or four-engine plane, I would say that two engines are still working, and two engines are, well, working not so good, not so well. Domestic demand is very low still. That's the main issue, the main problem of the Chinese economy since now a long time. It's also a matter of trust, because there is a lot of saving inside, among the Chinese population. It's a matter of trust. It's a matter of also of location of this saving. As you know, the situation of the real estate, of course, which is not very appealing for the Chinese saving. So the domestic demand is low, which has a strong effect on large part of the Chinese economy, of our business, also French business. I mean, some services, for instance, and which are very affected by this low domestic demand. And I would add also probably the private investment, which is not as high as we could expect. And the two engines that are still working are the public investment, but and especially by the province, but also it's becoming a problem because there is no such money as there were before. because provinces has to pay a lot of things, and so generally, for instance, the test for the COVID policy will have been transferred to the provinces. And you know, it's a cost a lot of money. The cost of all testing, when you test maybe 500 million people each day or every 2 days, it's a lot of money, and it has been transferred to some provinces. And you know that in some provinces they begin to make this test to pay by the population. Well, so the last engine, the only engine which works now is the export sector, which is very improving, which is a very good situation, but depends largely on the world demand. And when you see what will be the world demand in Europe and the US by the end of this year, beginning of next year, we are expecting a kind of recession in Europe, and the growth will be not very high in US. So the prospect for this export sector, and the only engines of the Chinese economy, is not very promising. So we'll have probably at the end of the year a growth in China which could be around 3%. So it's not so bad, 3%, but it's the lowest rate China has ever lived and faced since Mao Zedong's death, if you accept the 2020 year, which was completely exceptional. So it's a low rate, it's a soft growth, which is not something which was expected. And that, of course, is the first issue. The second word I would choose very quickly would be something like unpredictability or uncertainty. I know that these words are hated by investors and business leaders. And business leaders hate this word of unpredictability, uncertainty. But that's the characteristics of the current situation, because nobody knows what will be the situation, what will be the measure taken by the authorities in the coming week, in the coming month. They can be contradictory. That's a problem, that's an issue. It's something new in China because nobody got used to facing such unpredictability. And it's something which depends, of course, of the zero COVID policy. It depends also on geopolitics, as you know, because geopolitics had invited itself this year with Ukraine, with visit of Mrs. Pelosi in Taiwan during the summer and so on. This issue, of course, are very present now in the mind of everybody. Just to finish, the third word I would choose would be also, sorry, Christophe, I take the same bad habit. It would be resilience. I know it's a spoiled word, but it has a good meaning, I think. Because a resilient economy is an economy which can survive, overcome a lot of difficulties. And I think, you know, there are strong and solid bases of the Chinese economy, actually. Chinese economy is the first or the second in the world in many sectors, in new technologies, in new electric vehicles, new technologies, and so on. It's a place to be in terms of R&D in this sector. There is a strong and solid ecosystem for and we see, for instance, that many companies, and it was a result of the French survey, but it was also the result of other surveys, enterprises and foreign firms have a wait-and-see attitude, I would say. They are reluctant to invest a bit more, except some of them, a few of them, but they are reluctant to invest more because they're not sure what will be the situation next month or in next quarter. But in the same way, they don't want at all to disinvest. They want to stay and to remain present on the Chinese market because it's a very promising market. And if I just the word of the end, I would say the good perspective and the good idea for French enterprises in China would be first to be patient, to stay, to resist, to overcome the difficulty, to try to be resilient first. And second, also to be cautious of all this risk which exists now around the world and the geopolitics which has invited itself. And I would say not to depend too much on only one market, even a huge and very, very dynamic market as China. So to diversify probably its presence and activity around the world. Thank you very much. I wanted not to be too long, to let, of course, to respect the delay I was given. Thank you.
Thanks a lot, Jean-Marc. So firstly, confusion because, relaxation of the measure why the pandemic and the infection rate is raising. The second thing is uncertainties. Uncertainties because, we don't have vision on the futures. And the last one is resilient, and resilient. So thanks a lot, Jean-Marc, and thanks a lot for this sharing. Well, now I turn to Christophe Loras, because, with all the, I would say, adjective, very negative adjective, because the situation is not easy. So with that situation, how Accor is going through this situation, and what is the, silver lining that would you foresee for the coming months?
Right, thank you. In fact, to this question, Julie, I will answer twice. I will give my answer first on behalf of Accor and the hotel industry, and I will also answer that question: how did we go through the crisis, with my perspective of the French Chamber of Commerce, because those would be two different answers. So first, Accor, you know us, we are one of the largest hotel group in the world. We've got 5,600 hotels in the world. We have 550 here in China. That's almost 10% of the inventory. There is no other way to put it. We've been, it's been a roller coaster for us. We've been playing hide and seek. We've been playing open hotel, close hotel, open hotel, close hotel, because obviously with the zero COVID policies, with the travel restrictions, with the cluster going from one city to another, we've basically been in crisis management for the last 3 years in a continuous basis. If you take the example of Sanya, for example, this summer, the entire population of China went to Sanya for holidays. So our hotels in June were absolutely striving. And then the cluster came, and a hotel that had recruited hundreds of staff to cater to the customers suddenly had zero customers, and the bills are still there, and we still have to pay the salaries and the utilities, etc., etc. Anyway, so for us, it's very simple. As long as the COVID policy is in place, there is no way out for us, but also for the airline industry, the entertainment industry, the parks, the cinemas, the restaurants. For that type of service industry, we must have the end of the COVID policy. So we are waiting, and in the meantime, we are managing the crisis. And this is the silver lining that I see. The first one, the first silver lining, obviously, is the way our teams have responded to that, the resilience of our team. And here again, using this word. But this is true, the way hotels have reinvented themselves, the way they are able to, with agility, to open and close, to scale up and scale down according to the demand, was actually extraordinary, to the point that actually our group, Accor in China, we've gained market share versus our competitors during the last 3 years because of our capacity of adaptation to this situation. The other silver lining that we saw, and this will be a bit more interesting for the audience tonight, is that parallel to this, even though our hotels are not doing too good these days, well, our development has never been so strong. So for the past 3 years, we've signed thousands of hotels that are in the pipeline for China for the years to come with local investors. We've signed Raffles in Macau. We've signed 2 Sofitel in Shanghai, many Pullman across the nation, a Fairmont in Xiamen, in Zhuhai, etc., etc. So what we see is the appetite of our partners and investors to continue to grow hotels across the nation, which translate into their vision into the future of the economy of China. And this is a big silver lining for us. If you allow me to answer that question, how did we go through the crisis at the French Chamber of Commerce? Well, here I really would like to pay tribute to the people, the employees, the team of the French Chamber under the leadership of Caroline, the elected members of the board, and you are one of them, and Julie, and I see a few here in the room, our representatives, in the province since the beginning of the crisis 3 years ago. All of them have raised up to the occasion to give support and assistance to our members, to show their solidarity, to guide them through all the issues and problems that different sectors would have. And I really want to say that those last 3 years have been, I think, our finest hour, if you ask me. And today, all our members do recognize that the French Chamber is a central platform of solidarity and help and support for the French enterprises, and this for the years to come. So I had to say it tonight because, to your question, the people of the Chamber are amazing, and this is how we went through the crisis, and we continue to go through the crisis as we speak.
Thank you, Christophe. I can see that the hotel industry still sees a lot of development potential for the future.
Thank you. You know, I have to say a few words regarding, you know, the what you mentioned, Christophe, as a board member of the French Chamber. I would like also to thank Caroline and her team tonight for all the work and all the resilience and agility that they have demonstrated during the crisis. And frankly speaking, really, it was really an amazing, amazing team. And thanks a lot.
Michel, what about you? How did you go through this period?
Well, like many of the colleagues here at the Chamber in Beijing, I always hope to talk about this challenging time using the past tense. But the reality is that last week, Airbus factory in Harbin was closed. This week, we are doing home office in Beijing. And today, 10% of our employees in Tianjin and other plants are not able to come and work. So this reality is as well an industry reality. Maybe you're not familiar with the aviation industry. The number of flights and available seats today and this year is only 40% of what it was in 2019 in China. So definitely the first thought or idea I would like to share with you goes to the employees, because this time can be extremely generator of anxiety. And this has been mentioned in many of the exchanges we had at the Chamber. It is important that we provide support, attention from professionals to those employees to go through this difficult time. Because personally, this is not something I'm used to, and this is not my specialty as an industry leader. So my first comment goes to those employees, and then we owe them this attention and this care. Having talked about this period of anxiety, there is a second thing that we owe them, and I believe that I owe them, was to go out from thinking about risk only and start creating or capturing opportunities. And this has happened for Airbus in China, because besides the zero COVID impact on us, we saw as well a large increase of attention on environmental topics. So how did that translate into business opportunity for Airbus? We have, for example, decided to create a recycling center in Chengdu this year. So this has been signed. We have decided to as well develop research, a research center in Suzhou to address hydrogen infrastructure with Chinese partners. So this is an example of a trend that recently accelerated. Maybe another example that I would like to share with you is airlines are suffering as well extremely. And this race to go back to profitability is as well actually an opportunity for an industry like Airbus, because it has created an urge to renew the portfolio of product that they are using. And this is why this summer, you have, some of you have noticed that we had large sales and successful sales to most of the Chinese airlines. So all in all, staying careful and trying to move from risk obsessed to opportunity creators is as needed as developing our business, but as well, this is something we owe to our employees. Yeah, thank you.
Thank you, Michelle. I think that, challenge and opportunity goes together. Challenge always, give or create the opportunity. And we see that Airbus really show us with all the examples that you just mentioned. That's, we are really, really proud of Airbus, how you are agile on that situation. Well, now I turn to Mr. Li Jingchen of Forvia, because Forvia, it's in the automotive sectors. So what would be the impact that you have during this COVID period for your business, but especially for your sectors, and finally, in that opportunity or challenge, what are the opportunity following the challenge?
Okay, thank you, Julie. Good evening, everybody. So as Julie said, I work in automotive industry. So Forvia is number 7 global auto parts supplier. So one of 2 cars in the world is equipped with our products. So as you know, automotive industry is mainly driven by the economy of scale, by supply chain safety, efficiency. So the lean production model is a benchmark for us with zero stock, for example, as target. In addition, so there's a very high concentration of auto parts activities in the eastern region of China. So for example, 50% of auto suppliers are based in Shanghai, in Zhejiang, and in Jiangsu. So the last spring lockdown had a significant hit to the Chinese automotive industry because the production volume in April dropped by 46% versus 2021. Forvia, we have 25,000 employees in China, more than 70 plants in 32 Chinese cities. So during the crisis, we have to ensure first the protection of our employees, the second, the delivery to our customers, which were not impacted by the lockdown, and the third, the on-time development of the new products that our customer request. So that's a very tough period. Now, I think how to tackle this in the future. Personally, I think our world is impacted more and more by the certain events. So the business community probably has no right, no power on policy, but we need to anticipate and get prepared. At Forvia, we work on 2 levels. The first is, I would say, on the operational side. Since 2020, we have developed a clear procedure and a robust contingency plan. We have also developed some good practice to face such exceptional situation and to manage, I would say, simultaneously the employees' protection, the deliveries to the customers, and on-time development of the programs. As you know, supply chain efficiency used to be the key focus for our industry, but today, the safety is the top priority for everybody. A car has more than 10,000 parts and cannot miss one part to be sold to a customer. So today, the supply chain safety, autonomy, self-sufficiency through a deep localization plan are the key to sustain our business in China, for China.
Thank you, Jingchen. It is interesting to hear that this period enabled your group to put in place more efficient procedure in order to be better prepared for facing uncertainties in the current world. And you, Bruno, as a founder of SME, same question. What do you think about this?
Well, thanks for the same question. Indeed, I kind of represent SMEs today. So maybe I should start by describing a little bit what we do, because we are not, we're not a big brand name, or if you know us, maybe you don't know what we actually do. We provide digital solutions and consulting services for technical risk management, in particular to companies that have complex equipment plants. So our customers are industrial clients and infrastructure projects. So the first thing is, unlike previous crises, we have not seen government using infrastructure spendings to relaunch the economy. So typically a crisis for us is not bad because there will be more infrastructure spendings, right? And more concerns about risk, which is kind of our business. But this time around, we have not seen that. That was interesting. So overall, the market is not very good. Let's say the economy is not very good. Now, having said that, certain developments in the past few years have been positive for us. Let me describe a few of them. If you remember, 2018, 2019, you know, the word before. Everybody was talking about digital solution, and we still do today, okay, but there was the big wave of digital solutions, 4.0 projects, and especially for multinationals, and most of you are from multinationals, and big global projects with big consulting firms, you know, McKinsey, Accenture, something started at the headquarters, and a huge projects that would deploy all over the world. This was not good for me, for my business, because we are a very local player. We have Asia, China, Asia player. So we were disturbed by these global trends because decisions were made, you know, in Paris, in Munich, or whatnot, you know, in Los Angeles, and we are not there. And I think the crisis has changed that. Many of those big global 4.0 projects got killed, got cut. They deserve to be cut, okay, but they got cut for economic reasons. And that has been good for us, more local decisions, more practical, still, you know, digital projects, but more practical in China, local decision, which has been, I would say, very, very favorable for us in the past 2 years. The other thing which has been good is our competitors have not done so well in this past few years. We have roughly two types of competitors, and we have two big American competitors, and somehow we don't really see them anymore in the market. I think they have been very conservative in dealing with the crisis, whereas we have been probably quite aggressive in new investment in R&D, for example, and so on, and our expansion outside of China as well. So investing from China in Southeast Asia, for example, these two competitors have been very conservative, and I think this have not served them very well. So we don't really see them. And then we had, from the previous years, and I described a little bit 2018, 19, from previous years, we had a lot of new competitors coming out of nowhere, you know, those companies doing 4.0 stuff, you know, everybody can do. So a lot of small competitors out of nowhere, usually on low cost, operating on a low cost, low price basis. And I think most of them just didn't survive the crisis for financial reasons. So the outcome for us overall is quite positive. I mean, these have been tough years, and don't misunderstand me, but we've been doing well. We're profitable. We've invested. So I mentioned competitors not being very conservative. We've been quite aggressive on R&D spendings and growing the company from China and in export markets, despite the travel difficulties, and that has, I think, served us quite well. So let's see what happens next. Okay, we don't know, but it's in my view, it's looking good, and I think those type of investments we have been able to make will pay off. Cannot say for sure, but it's looking good, and since we've been profitable still in the past few years, I mean, we still have some money in the bank.
Thank you, Bruno. You know, usually it's in the very difficult situation that it shows the resilience of a company, his brand, especially his management, and the strategical decision of the local team. So thanks a lot, Bruno, for this sharing. Emmanuel, I turn to Emmanuel because, you know, Emmanuel, what would be the impact on the business of mergers and acquisitions since the COVID? And, you know, in your opinion, what would be the most advisable business model or investment model for China nowadays?
Okay, thank you, Julie. I think like Bruno, I'm probably in the right business because M&A, merger and acquisition. So I am in merger and acquisition, and in the boutique investment bank, we're doing M&A advisory. So 2021 was a record year in merger and acquisition worldwide. You had $6 trillion of operation. It's 50% more than the previous record of 2015. So that gives you an idea of the deepness of the activity and how dynamic were M&A. It was fed and by the liquidity from all this fiscal stimulus from governments, from the monetary policy of central banks. So you had historically low interest rates. You had private equity, which had historically high what we call dry powder. So money to invest. You had access to credit, which was abundant. So all this fed merger and acquisition around the world, throughout all sectors of activity, and especially through tech. Tech was the main sector, but all sector, I would say, benefited from it. And Wall Street investment banks and investment banks around the world, they had record fees, record revenue. So it was our case in our firm in 2021. It was our best year. And this year, M&A worldwide started cooling down. The tightening from the central banks. Like drying of financing in some area, which by the way, we can see some bubbles. So in the crypto space, for example. So it's like a little bit back to reason, and all is cooling down, but still we're back to pre-COVID activity. I would say M&A worldwide. Now on your second question. It's a tough question. The winning business model and investment model for French companies in China, or for any, I would say, foreign companies in China. So you see the changes of conditions worldwide. I think it's exacerbated in China. The shift, the brutality of the shift, whether it's in consumer trends, whether it's in government priorities, the brutality which can be positive in a way or negative, as well as the deepness of the market, the size, the growth of the market, the complexity of the Chinese market, and the uniqueness of this market. I was just looking for Double 11, the number of sales platforms that you have, the number of mode of payments that you need to master to be able to sell on this platform. This is just so unique that it requires foreign companies to have a very singular approach in China. So first, I think they need to have, and it was mentioned, you need to have the top talent to manage your activity in China. And I know it's not easy to bring talents right now, you mentioned it, but top people should be there because you have the complexity to manage. You need to have direct access to the chairman of your group, because the shortness of the hierarchical layers should be as short as possible, because you need the speed in taking your decision to adapt to this so unique market. On the investment side, I think winning, and around this panel and in the room, you have very successful French companies which have applied, I would say, their investment model gives them a multiplication. I would say they multiply sensors on the market. That means they have various feedback from the market through different structure they have. So at the same time, they combine organic growth. So they grow through greenfield, they go through their own extension of business, which they combine with acquisition. So they acquire companies at the same time, whether it's majority deal, taking control, or minority deal, just like, in a way, giving them, an observation post to know whether, if it goes well, they can increase their shareholding. If it doesn't go well, they can exit. So this gives them the flexibility. Also through creating joint venture. And some of the groups, on top of all these models, because they are doing all this at the same time, they also do some VC, venture capitalism, either directly through startups or through funds. And this is not only for large groups. Large groups are doing this, but we see also smaller companies doing the same thing, of course, at their level. So I think that would be an idea of a recipe for success.
Thank you, Emmanuel, for this panorama of the winning investment model. And Michel, in your industry, how did your company respond to this period? Special times or special solutions?
Well, first of all, the response plan that we had in the last years was not a dedicated Airbus plan. I think we have to stay humble on that, and it has been designed and co-designed with the whole industry, with our suppliers, across industries as well, and we have definitely learned a lot from those years. But maybe I would like to share some personal learnings from recent events, things that are helping me, and I hope that could be helpful to some of you. The first thing is, we've been talking a lot about efficiency in the past. Efficiency was one of the priority for our factories, for our supply chain, and it is changing. So the word that I'm using the most now is more about robustness. So why do I say that the word has changed? Is because robustness could mean as well inefficiency. Robustness means buying and building some stocks, means piling up as well some stocks of finished product in the only target and with the only target of securing a kind of steady mode of operation. So going from efficiency to robustness is something that I wanted to share with you because this is helping us already today. And I believe it is something that will help us for the next month, particularly in China. The second thing that I would like to share with you is I personally had this obsession of being plan-driven, long-term vision-driven, which is still good with certain conditions. Or more particularly, the way we are doing that today is more scenario-based. So the approach that we are using is scenario-based strategies and combinations of scenarios. Why are we investing some time in doing that? It is because it is providing some guidances for the teams and our partners. But at the same time, it is preparing us to have a very high level of flexibility and a faster reaction mode. So robustness and scenario-based strategies are some learnings that I wanted to share with you. And I would, of course, be happy to discuss further if needed later. Yeah, thank you.
Thanks a lot, Michel. The solution found by Airbus prove a strong capacity of adaptability and resilience. Jinshen, are you also seeing new business models in your industry? And what are the development prospects of your company in China?
For the new business model, the answer is clearly yes. I think, as you know, since the creation of the first internal combustion vehicle in 1885, so the automotive industry has passed already more than 130 years. So today, our industry is facing a major technology transformation. Linked to the powertrain electrification, autonomous driving, connected and smart cabin, etc. So the technology is reshaping this old industry, and the growth driver and the patterns are shifting tremendously and very quickly. So of course, I think this transformation has generated already and will continue to generate the new business model. On the vehicle side, so new players emerge on new energy vehicles, especially on the battery vehicles. Their value to the end user is no more on the sales of the car, but more on, I would say, use case or user experiences. On the supplier chain side, more and more consumer electronics and the software company penetrate into automotive industry. So the ecosystem becomes a kind of must-to-have in the new competition, driven by software, by algorithm, by computing capacity, by AR, big data, machine learning, cloud services, etc. So the value of our industry, the core value of our industry is moving from hard to soft, from manufacturing to services, from global and to a more regional approach. So that's generate a lot of new business opportunity, of course, and together with also the new business model. I think you know that China is the largest automotive market in the world since 13 years and will remain the same. Just to give you a few numbers. So this year, the China light vehicles volume will be above 25 million units compared to 16 million units in Europe and 15 million units in North America. So by 2030, China volume will reach 32 million units, which represent 1/3 of the global volume. So which means that there's a huge potential. So with our development prospect in China, we are pretty confident despite a local competition, which is getting more and more fierce. We are confident because first, we have a solid presence in China. Forvia is the combination of French Faurecia and the German HELLA. So both companies have been in China for more than 30 years. So we have a pretty strong footprint, R&D, innovation, capabilities, etc. We have 6 business groups matching to the market trends and techno trends. This is important. The second point is that we place the decarbonization as our core strategy. As you know, China has this 30-60 strategy. We go in the same direction. So Faurecia all production site will be carbon neutral by 2025, and will be carbon neutral for all our value chain by 2045. So this means a lot of business opportunity also. Finally, I would say is because of a deep localization strategy. Localization in terms of first the material, including the bio-based recyclable sustainable material, in terms of the equipment, of course, in terms of the local talents, in terms of our management teams. So this will prevent us from the potential risk, especially the geopolitical risk. I think these are the reasons for which we remain pretty confident.
Thank you, Jingchen. Very interesting. I mean, 2030, 1/3 of the market is in China, global market. 32 million of cars would be sold in China, 1/3 of the global market. So I can see the huge potential and decarbonization also. Because the Chinese government has fixed an objective of 2050 with the peak and 2060 as the neutrality of the carbonization in China. And lastly, I mean the local for local. So you are really investing in the local talents. Thanks a lot for this very, interesting sharing. Well, I turn to Bruno because Bruno, you have just talked about the resilience of your business, but could you share with us what would be next? Especially, you have also talked about the exportation, of the new products and etc. What would be the new prospect for your business in China?
Thanks. Well, the new prospects are based on the on the old and the history behind, and as I said, I think I said I'm like optimistic. Maybe optimistic is not the right word. I'm optimistic, not all the time. But when I'm outside in public, I'm optimistic on the prospects here, and we actually signed our largest contract ever during the lockdown, during the Shanghai lockdown. It didn't come to us just like this. It was the end of a 2-year sales process. Okay, but I take it as a very good sign of the bright future. You mentioned, yeah, and I mentioned our investment outside of China. So what we are doing is we've been doing for many years actually from China, developing our business overseas on the Belt and Road. I think you've heard or seen a relative slowdown of Belt and Road investments for a number of reasons. Travel restrictions play a role in this. We actually see less projects, but maybe higher quality projects, which are good for us. They were our target projects. So on the Belt and Road, which is together with Chinese construction groups, we have growing business, and we see growing business. We just lost a deal today in South America, but there will be more to come, and which we are going to win. We also work directly with clients overseas. So we're actually investing in subsidiaries in Southeast Asia. I was in Southeast Asia. I came back 3 weeks ago. So I spent 2 months in Southeast Asia. So then you can say, well, this is, you say Bruno or Civico is divesting or investing outside of China. Yes, well, it's from China. So for me, it's part of our business. But yes, it's also a way to balance our business, and also to have people outside of Chinese borders, so we can a little bit more easily travel. So that's one side of the future expansion or the ongoing expansion, but it's based on the long history. The other side is, maybe I mentioned already, we invested a lot in R&D. For us, is software development. From the beginning of the crisis, when COVID-19 started to knock on our doors, February 2020, immediately I said, well, we would invest more. That's what you can do when you are the chairman and one of the major shareholders of the company. So we decided to say this, and we did. And it's paying off. So we really did. We invested actually a lot in terms of R&D. It's paying off. One example of this is we recently got into what you could see as the ESG business, environmental, social governance. You know, there's a trend, a lot of hype, a lot of bad press as well. Okay, for whatever, but it's a trend and we see a lot of companies doing monitoring of different kind of indicators related to environmental, social governance, and so on. And since we come from a more technical background, we found it very easy to go from in-depth. What we normally do is like in-depth, tools for planning and compliance, ensuring that technical actions are being taken, and measuring the impact of the technical actions. So more on compliance. So actually measuring, monitoring is much easier to do. So we went into that monitoring market where we found competitors that had a good business, but those competitors are quite weak in terms of ensuring compliance. They just measure, they don't ensure things are done. I simplify a little bit. So it's kind of a new market that we got in thanks to the investment we put in software R&D. So as I said earlier, I think this I hope it's going to pay off. It's paying off already, because we have been at it for a long time. I think customers value the fact that we survived. Customers value our longevity in the market. And I'll conclude with this. But this morning my team was with one of our customers that a prospect we have been talking to since 2004. We never did business with them. Since 2004, we talked to them, a big Chinese infrastructure. And they've been doing their own things. They've been working with our US competitors, and nothing worked. And this morning, we had a very good meeting. And they basically told us, oh, you're still there. What you told us was right. Let's do a project. So it took a long time to get there, but I think it's a positive sign again.
Thank you, Bruno. So the experience of Bruno is really to develop what we call the emerging market like Southeast Asia, and also the One Belt, One Road. And I really concurred that on the ESG, for the ESG indicator, develop the software to really measure the ESG indicator. It's absolutely the rising needs of the companies. So, Emmanuel, is it finally, the good time to invest in China, and especially to acquire a company in China?
The answer is to rebound on what Bruno was saying. Bruno was not the only one to heavily invest during COVID. If I look at the inbound, in M&A we talk about inbound and outbound. So inbound deals are foreigners acquiring companies in China, and 2021 was close to a record year, close to 50 billion USD of inbound deals. So foreigners buying Chinese companies, and the percentage of merger and acquisition when you inbound deals. When you relate to the total foreign direct investment, so the FDI is 150, 160 billion USD. So the share of M&A in the last 10 years has represented from 15%, 15 to 30%. So meaning when foreigners do operation in China, 30% of the investment is done through M&A. So this is really a shift. It's doubled the size of M&A. It's still small, regarding to the total FDI, but it's still it doubles. So that means you have targets. You have targets to acquire. You have Chinese companies to buy. And by some criteria, European companies this year, on the first 8 months, their investment doubled. So the EU Chamber of Commerce will tell you that, yes, it's still very low compared to the rest of the world, but it's double compared to 2021 on the first 8 months of this year. There's been many, many deals from European companies in automotive industry, in financial services, in asset management, in food. Also, Danone did 2 deals, Bell, our client, did 2 deals. Publicis did 1 deal in the digital space. So it's been, and of course, German companies have been very, very, very active. So there is this trend, and if you look at the overall market, it is very, very dynamic. So why is it happening now, and why is it so active? I think the valuation are historically low. When you acquire a company in China, it's low, not only on the stock market, but also, when you discuss with founders, the Chinese entrepreneur who created their company, they are willing to, welcome foreign investors at lower valuation than a domestic investor, because they understand the value that the foreign investor would create at the Chinese company level. It's usually, what we see often on the European side, European companies or foreign companies are usually an edge in productivity. I think it was mentioned today. So you combine advance in productivity from the European side with the sales growth of the Chinese side. So you combine the best of both worlds. On top of that, Chinese founders are very open to internationalization, because they see, the Chinese market is so competitive. So by, accepting foreign shareholders in their capital, it would open the world to them. Very often also you would help them to become premium, so the premiumization. So for all this reason, I would say, the timing and the time is ripe to do operation in China. And you have a kind of alignment of interest. China is very sensitive to this notion of being mutually beneficial, and that's the case today.
Thanks a lot, Emmanuel. So it is quite contrarian regarding the headlines, but it makes sense to buy the dip.
Buy the dip, exactly.
Before the Q&A, I would like to give the floor to Jean-Marc for a summary of our discussion.
Oh, sorry. Everybody see me? Yep. Yeah. Well, thank you. No, I would not sum up actually, because there has been so many insights and so interesting. Thank you everybody for that. I would especially would like to thank the dream team of the chamber for organizing such an event actually, and to repeat them, but how it's an honor and pleasure to work so closely with you actually every time. I think the main word of the evening I heard in many insights was resilience. I know it's a very used, once again, word, resilience, but it was probably the word of the evening, actually, because it shows very well how important is it to see just a bit further that the next week or the current situation of today, of the surge of COVID and so on, and to project itself just a bit more and to see the future and the very large opportunities this country has in many new sectors, and of course some intervention and some insight have shown how it's important to be there. When you speak of electric vehicles, actually, the heart of the topic is here, and it's a place to be for that. Just now, actually, it's just an example. I would like to add something more specific, and maybe especially for our friends of the French companies represented here, because I heard sometimes, and I live myself with my own authorities, sometimes in Paris, that there is sometimes now in our headquarters in general, how to say it, how to tell it that. I would say a kind of Chinese fatigue, I would say. Yeah? We have a very important role to play here, all as we are, to be a bridge between the situation we see, we live, and the perception how masters or headquarters are in Paris. Christophe recalled during the survey at the beginning that the image and the soft power of China has dropped dramatically during the last few years for many reasons. It's not the place here to define them, but we have to be this bridge and to recall to our headquarters how important it is to be in this country and to overcome the very current situation or difficulties of the moment and to project itself just a bit further, because it is a place to be, of course. Just to finish, I would say that the coming year will be very important. We say that probably every end of year, but probably this time is very important because it's Christophe, I think, who said that this zero COVID policy has not to be an endless story, because it could become something disparate, actually, and we feel among us here, we live in China, and we see even amid the population a kind of fatigue of weariness of this situation. That is probably what I call the mother of all the battles, even for economy and for the recovery, because there is some basis and a lot of strength in this country to recover from this situation. But it has not to be short-sighted, as it is now with some other measures the day after, and to launch an exit way of this policy, just like the rest of the world. Of course, it's not us to decide that. Of course, we are only guests in this country, and that's the case, of course. But I think it's a hope we could formulate for the end of this year and for the next year, and for the big opportunities once again this country brings to us. Thank you.
Thank you, Jean-Marc. I mean, although the situation is not easy, it's difficult, but it's still the place to be. And we hope that the situation is going to get much better, in the coming weeks or months. Well, thanks a lot, Jean-Marc, for this very nice conclusion and the positive conclusion, Well, do you have I don't know whether you have any question in Beijing or in Shanghai?
We have a question in Beijing.
Yeah, okay.
So, hello, can you hear me? So my name is Socrates. So some of you know that I work for Société Générale. So one of our motto is to support the economy and therefore supporting the company. So my question to all the speakers here is, in these difficult times, and I will take the two words. So one is resilience, and the other one is opportunities. How you have seen the support from financial institutions in these difficult times, and what could have been done better from financial institutions to support your respective companies in this context?
I'm going to start first, and then maybe Emmanuel, you're going to complete. I think that we should ask the question to you. But jokes aside, French companies in China are dependent to the local environment. So it basically depends on how the local environment and how they deal with their own banking system. So there is not one cookie cutter answer to that question. If you take the example at the beginning of the crisis, there was some relief policy from the government. I think the French company were beneficiating from this as much as the local companies. But now French financial institution helping French company in China, that's a very wide panorama. I'm not sure that this was happening, but I don't know if you want to.
Okay, so from my side, what I want to say is that the first, so Forvia, we are growing business in China. So this year we will have 20% growth. Next year, according to current projection, we will have 20% again. So in such a situation, we will need the bank support for our activities, of course. But two things. The first one is our credit line are more or less decided by the headquarters, so it's not in China. So you have to talk with our headquarters in Paris. The second is what I heard is that for next year, due to the high level uncertainty, so there's a restriction of the credit from the bank or financial institutions. So I do not know whether it is true or not, but it seems that our finance has already some difficulties to to get the support.
Any question in Shanghai? We have a question in Shanghai.
I have a question for everybody, maybe for Christophe or Jean-Marc, who has maybe a overall view. We see a reinforcement of SOE in many sectors, many industries. It's the case for construction, in which Saint-Gobain plays. It's also the case in digital. We have seen the recent announcement of partnership of association between the big players. What is your opinion on that? Is it a message of a goal of controlling more and more the economy from the Chinese government?
Okay, I'm going to respond before you, Jean-Marc. I'm not sure it's a goal of controlling. It's definitely an ambition of developing national champions, for sure, and to be self-sufficient and independent, and also to showcase skills and knowledge and talent of local development. So that for sure. Is there a different hidden agenda behind? I don't think anyone can say that today. Jean-Marc, you want to take this?
No, nothing to add. Actually, the word I wanted to use was exactly the same. It's to create national champions, and we have now a national champion in naval construction, in railways, in things of that. But we could have had also national private champions. It was the case in the tech, for instance. Actually, well, I'm not sure there is not, however, a kind of hidden agenda, and there is a strong preference of the current government and the current authorities in China for state-owned enterprises better than private one. Yes, probably. Yes, and I think it's a long-term or middle-term line in this matter.
Maybe one additional comment on the private equity side. We see a lot of local government financial vehicles, what we call LGFV, which are approaching PE funds in Europe and in France in that case, because we're very close to a few French PE funds which have been approached by Chinese local government financial vehicles to set up, common vehicles through kind of joint ventures arrangements, so that together they would invest in both companies in Europe and in China, align with the central government objectives. So in line with what we call the little giants, whether they are in semiconductors, whether they are in AI, whether they are in EV, quantum computing, and so on. So that I think that's something new. You know, in the past, these local government financial vehicles, they were, you know, involved in doing, for example, some of the outbound acquisition in Sandromage, for instance. Sandromage in the fashion world was acquired with the support of a local government financial vehicle in fashion, and now you don't see this at all. They are more totally aligned with the you know, ambition and the objective of the central government.
A question in Shanghai.
Good evening. The question relates to a figure that was mentioned by Jean-Marc Fenet a while ago, when it says that the expected GDP growth for China this year would be 3%. And I was wondering whether that figure might be maybe considered by you guys a real figure or overly optimistic, considering that the GDP growth in China heavily depends on the real estate on one side, and this sector in the economy have shown clear signs of problems, let's call them in a generic ways. And also there are other signs which are a bit worrying, like the youth unemployment rate, which is close to 20%, I understand. So is it just this forecast just be too optimistic, or am I being too pessimistic?
Jean-Marc, you want to take this?
Well, when I talk about 3%, it's an average. The consensus, what we call the consensus is what? Is the forecast of the private chief economist of private sector of banks, for instance, or international institution like IMF or like Asian Bank of Development. Well, it's something between 2.9 and 3.2. So I said around 3%. Well, it could be more. What we know, what is just lacking now is the growth rate of the last quarter. We still have the rates of the first quarter, which are very contradictory because it was, as I said, very up and down, depending on the COVID situation. High in the first quarter, very low in the second quarter, higher during the third quarter. It was almost 4%. So I think probably the last quarter will not be very good, actually, because we know that there is still a lockdown, and we see that the Guangdong is very hit by the COVID. Sichuan, Chongqing, these places are very, very much hit by the COVID wave. I think 3% probably is a good expectation. But, you know, as I repeat that, it looks well like that. It's a low rate for China. It's a low rate for China in the time, because, as I said, it's the lowest since 40 years, if we accept 2020. And what is more important also is that it's a very low rate when you compare to other Asian countries, because in the ASEAN country around, in Vietnam, in Malaysia, in Indonesia, in Korea, Taiwan, and so on, so the rates are much, much higher, and India also. Or there is also a recovery, a catch-up. So, well, it's for this year. For next year, there will be probably a catch-up phenomenon, and could the prospect just now, but it's a consensus once again, could be something like 4.6 or 4.7. Well, I think in the middle term, we'll have probably more moderate rates of growth. That means the two-finger rates we have known at the beginning of the 2000 year, that's over. The figure of 6 or 7% we have known just before the crisis, that is over. And probably for the next year, even if the COVID-19 is just a bit more fixed as it is now, actually we'll have a more mature, I would say, a country with rates between 4 and 5% probably. Well, it depends how this growth is directed, is well dedicated to, and you have good growth, and well, this growth has not to be, I would say, supported only by by export, I say, because it's very fragile. It depends on the world demand, which is very, we don't know exactly what will be the situation next year. And public investment. And the problem of public investment now is that it's a tool of the authorities to make sure that they have the right number and the right figure at the end of the year, because they have the hand of this tool. But the problem with this investment now is that they are becoming more and more, less and less efficient, because you cannot build everywhere high-speed tracks, high-speed trains everywhere, because it has already been done. So it depends. A good growth for the next year should be a growth more supported by domestic demand. It's exactly the goal of the authorities. When you hear about dual circulation or prosperity for all, it's exactly the focus to be made on the domestic demand. So it's a big issue of the next years.
One question in Beijing.
Hello, Clément Barraud speaking from Beijing. I have a question for Michel from Airbus. You mentioned robustness and different case scenario for the coming months. Could you please share with us your hypothesis, without revealing any secret, obviously, your different hypotheses in terms of scenarios? Thank you.
So just some clarification. So within Airbus, we are delivering some services and products going from helicopters, aircraft, satellites for both private, governmental, and defense sector. So we are very sensitive to a few items, just to name the major ones. We are very sensitive to the export control rules. We are very sensitive to potential sanctions related to technologies. And we are very sensitive as well to disruptions on our supply chain, which means zero COVID application to customs check, price of transport internationally. So these are examples of items that we are considering. And being not able to judge exactly and answer exactly this $1 million question of when zero COVID would end, we just take the assumption that many scenarios could happen. Then we mix all of that together, and then we draw some potential growth or reduction consequences. Yeah. I would like to come back on the item of export control and potential sanctions. This is something that is quite new for us as an industry. We are not used to screen so regularly any potential changes. This is something that we are learning to do. This is something that we are doing within the industry and community. So this is a group exercise. And the complexity of our industry is that being international is not only about export control rules between US and China. It's as well from China to France, from UK to Germany, from Germany to Spain. So this is the complexity that we need to incorporate into our next step definition. Yes.
Thanks a lot, Michel. I guess we have no more question in Beijing. Antoine has a question.
Excuse me. Once again, a question to Jean-Marc. Do you have some information to share with us after the German high-level visit in China? One, or if we have a French delegation in China in the coming months. Thank you.
Well, it's not a secret because our president has told that during the press conference in Bali, in Indonesia, during the G20. He intends to pay a visit to China next year, probably next first half of the year. The exact momentum is still to be debated, to be decided, actually. But we probably will have a state visit next year in China, which would be the first one since November 2019, which is a very good thing.
We have a last question here in Shanghai.
both Michel and Tingshan, you all say that from your supply chain, you will go from efficiency to robustness. I think we got the same message from you. Can you give us a few examples of how concretely you implement this robustness, like other than stockpiling more pieces, and how this will change the way you work on the long term?
I will start and maybe I'll hand over.
And then,
So during the first question, I did mention to you that we had a factory that was closed for 10 days in Harbin. And this factory is delivering for the worldwide production site of Airbus. So a disruption on Harbin would cause a complete stoppage of the complete Airbus. But what we decided to do is to pile up 3 weeks of finished parts. And this is how concretely we are going through this type of closure. At group level, it means that we need to secure in our cash flow enough to absorb these buffers for all suppliers. We need to find space to store. And we need as well to work with the auditing companies, financial auditing companies, because we are not storing only parts. In Tianjin, for example, we have currently 20 aircraft that are being stored, finished, and that are in our books. So these are things that we need to take into account, impacting our free cash flow. And we have to anticipate that.
Okay, so from our side, I think this is linked to a more global thinking because we do every year strategic plan exercises. So in this year, what we are thinking about is the regionalization versus the globalization. And especially with for our industry, the chip shortage, the semiconductor crisis, technology decoupling, etc. So we need to rethink how we secure our supply chain. So basically what we are doing is a kind of business impact analysis. You know, in China, we have 70 plants. We have 6 auto clusters. So before we focus more on efficiency. So you need to have the scale, you need to have everything basically in order to reduce your cost. And now we try to rebalance our supply chain in different auto clusters. Of course, we sacrifice the efficiency, but we need to protect the safety, the robustness first. Because if the assembly line of the car is stopped, it counts on millions and the millions euros, dollars, renminbi, whatever money you want. But it's a huge loss for everybody. So we cannot offer that. So that's why in today's situation, we believe that the safety is the first priority. Yeah.
Thank you. So before I let our moderator conclude this panel, thank you very much, by the way, Julie. Thank you very much, Caroline, for moderating this panel. So this roundtable was actually the closing event of our General Assembly, which was today. And for this General Assembly, there was a vote. And a question was asked to all our members. And what we propose to our members is to extend the mandate of the board, elected board, from 2 to 3 years. And to that question, you have answered yes at 98%. So this is the result of the vote. In consequence, we will amend the statutes of the French Chamber, and this board will continue for 1 more year. And after this, every election will be for 3 years. So thank you for your vote today. And then I'm going to now let our moderator to close this panel. No? Yeah, I think you should.
To conclude, we have to thank you in Shanghai and in Beijing. Thank you so much. And now we can go for the cocktail. Thank you so much, Jean-Marc. Thank you, Michel.